class, I was wondering, does anybody here have a credit card?
Debit card.
Okay, awesome. So I just want to give you guys a brief background on what my presentation is going to be about. So today I'm going to be talking about credit cards. And for me, I like to let people know about financial literacy because it's very important, and it could be, for example, credit cards could be a tool that can be used for you to, let's say, get a house, get a car, and mortgage, stuff like that when it comes to loans, and get like a very good interest rate. And this is one of the tools that we have early on that can be very, very powerful if we use it correctly and use it in a very smart way. So what is a credit card and how does it work? So a credit card basically is just a plastic card. It could be plastic or metal. It can be given by a credit institution or a bank, and it's used to pay goods or services. You go get Dunkin' Donuts or you go to McDonald's and you get something like that. Something simple, but the condition is that you would have to pay the full amount by the end of the month, typically. And when you do that and you can make purchases over time, and let's say if you were to pay the credit card on time, this could boost your credit score. And if you guys don't know what a credit score is, it's basically a number given to as an individual that can a lot of factors come into this credit score, like payment history, unpaid debts, credit card use, accumulated credit age, and total accounts. I don't want to complicate it too much, but basically, if you were to get a credit card, some good habits would be to pay the credit card on time, having accounts open as much as you can, just because that helps you increase your credit age. Because when you're starting, typically they don't want it's kind of catch-20. You need credit to get credit, so let me show you guys. Let me just reword on that. You need credit to get credit, and one of the first cards that you could get as a beginner would be like a cash secured credit card, which it's like I'm gonna go later on in depth into it, but it's like a good starting way, a good starting method to start a credit. So what is an APR? An APR basically is the annual percentage rate. This is like the interest that you get over a loan on a yearly period, and it varies from credit card or bank that you go to. Not every bank or credit card is going to have the same APR. You have to look and see which one offers the lowest rate, but it's also important to be careful because there's some things called as variable APRs, which they're not flat, and they can change over within a year or two. So it's important to watch out for that. So good habits. Good habits, I would say, would be paying balance in full, using what you can afford, because I can tell you guys from experience that when my first time I got a credit card, I maxed it out, and it was not fun trying to pay it back. It was having to pay interest on it. It just really messed me up financially, and if I were to give some advice right now to myself in the past, I would say to just be careful and use what you need in the moment. Avoid maxing credit cards out. Keeping like a low utilization rate. This also takes an effect with the credit score. Let's say, for example, if you have $100, a credit card that's $100, and you use 10% of it, and it's very low, it's $10, but that will increase your credit score, which is kind of surprising. But it's also important to understand spending habits. If you spend, let's say, on more gas or more clothes, more shopping, restaurants, stuff like that, it's important to understand where exactly your spending goes, just so you know. Let's say you have a credit card that it's good for gas, or good for shopping, or good for restaurants. I don't want to complicate it too much, but it's like you can max out benefits the more you use them. So types of credit cards. One of them is a secured credit card. These credit cards are made for people with little or no credit history. They can also be used to repair credit. I've had one of these. This is actually one of my first ones. I got one from Bank of America, and they gave me a $300 limit. And when I used it, I was just using it as not too much, but there were months where I would use over what I needed to, and I had to pay it just to reduce the balance of it. But these are good to just build credit, especially if you don't have any. Cashbacks. These cashback credit cards also they reward the user by giving money back. Basically, typically for every dollar you spend, there's some that just give you not a dollar back, but just a 1% back on purchases that you make. They don't have any annual fees. I know if for those of you that have been looking for credit cards, there's some that charge you to get one. Well, if you were to apply for one, and let's say you do get through, they will charge you like a $95 or $100 plus fee on it. The cashback typically don't have that just because of the benefits that they offer. And typically 670 credit score or higher, and approval odds depending on the issuer. Travel and hotel. These are more pricey. They do have high bonuses in terms, let's say, sign-up fees can include like $200, $200. If you were to apply for one, they'll give you $200 to $300 in points and benefits. But majority of these credit cards require an annual fee that has to be paid on a yearly basis. But if you travel or do, or let's say you fly a lot or you stay a lot in different hotels, these would probably be a good credit card to have, just to accumulate points and take advantage of the rewards. So in conclusion, credit score is given to an individual business based on many factors. Paying in full balance before the due date can increase your credit score, and make sure if you guys were to apply for one, look out for these variable APRs, because if you were to miss a payment, it can affect your monthly balance, and it's the best thing to do is avoid paying interest on them. And yeah, the type of credit cards are secured credit card, cashback, hotel, travel credit cards. So yeah, this is my presentation.